Okay, let's start today's paper. This is our seventh, maybe eighth. Okay, I don't remember anymore. I guess, yes, let me count. 1, 2. Yes, this is our eighth set of paper on LCCI Level 3 Financial Accounting. Today we are dealing with the paper for July year 2019 for preparation of the last Pearson LCCI exam. So let's start. Okay, again. Okay, the paper details. Okay, 100 marks, 5 compulsory questions. Let's start. First question, extended trial balance. Okay, we have 7 items. Okay, and then calculate the adjustment to the value of inventory. And then 15 marks for the extended trial balance. Total 18 for the first question. Let us start. Colon provided the following information in addition to the extended trial balance extract. Inventory had been undercast by 900. Inventory valued at cost 1250, damaged. Okay, this is the cost. Okay, and damage can only be sold at half of the cost price. Okay, so half the cost price, 1250, it is equal to 625 NRV. Okay, and then the impairment is 625 as well. And then let's see, any other items related to inventory? No other. Okay, so inventory undercast, that means we have to add 900, okay, and then minus by 625. Okay, so 900 minus 625. Okay, so the adjustment would be 275 increase. Okay, so 275. Let us go to the extended trial balance, closing inventory you see here. Okay, so we have to increase the amount. Statement of financial position is in the debit side, profit and loss in the credit side. So if we want to increase, it would be of the same side as the normal balance. Okay, so next part, item 1 and 2 finish, and then we go on to item 3. 8% bank savings account was opened on the 1st of January. No interest have been received. Okay, so there should be the bank savings account in the extended trial balance, 8%, and then 5 months has passed, so we have to have the interest income for 5 months accrues in arrears. Okay, 8%. So let us look at, yes, 8% savings account. So 24,000, 8% multiplied by 8%, multiplied by, we have 5 months already. So multiply by 5 over 12. Okay, we should have interest income of 800. So we go down and see which item will be best for us. Bank interest received. Bank interest received 800 for the income credit side, because it is other income, and then it is other receivables for us. Okay, next. Item 4. No entries have been made to record the disposal of equipment costing 114, carrying value 61, and then the proceeds received by check. Okay, so cost 11400, carrying value. Okay, cost minus accumulated depreciation is equal to carrying value. So 114 minus -610059 1 y 11400 minus 6100, it is 5300. Okay, this is the accumulated depreciation, 114. Okay, so cost is in the debit side, accumulated depreciation in the credit side. So we put it in the opposite side for reduction, 5300. Okay, and this goes to the disposal account, so 114 here. And then how about the proceeds? Proceeds 4920. Okay, so here we have 4920 plus the accumulated depreciation 5300. 4920. Okay, 10220 here. Okay, and we have a disposal loss. You can see the debit side is equal to, is greater than the credit side of the disposal account. Okay, so this one finished. Next, returns in 860 had been credited to the returns outwards account as 680. Okay, returns in as returns out, and the amount is incorrect. Okay, so I will take out the incorrect one first. So returns out 860. Okay, it is in the credit side. So if you want to reduce, then you debit it. Okay, and then it goes back to returns in. The correct amount 860. 1540 goes to the suspense account. Okay, next, rent. Rent expenditure for the 11 months was for the 11 months to 30th April. Okay, that means we have 1 month accrued. Okay, so let us go to the rent. Rent, where is it? Yes, rent expenditure. So 31240 divided by 11, we can find the remaining month accrual divided by 11. Okay, so expenditure is in the debit side, we want to add to it, so it is 2840 here, and other payables. Last item, credit purchases 725 had been recorded twice in the purchases table. Okay, credit purchases recorded twice. 725. Purchases is in the debit side, so if we want to reduce it because we record one more time, okay, credit 725. Okay, and then trade payables 725. Okay, because if it is entered into the account twice, then it must also appear in the trade payables accounts as well. Okay, so we finish these 18 marks. Question 1 done. Question 2. Question 2, we have an email, okay, about irrecoverable debt, something like this. Yes. Okay, and allowance. Okay, and we have some stakeholders. We have to prepare the allowance for doubtful debts. Okay, the journal. Okay, and then some explanation. So I would say this question is related to irrecoverable debt. Okay, so let's look at the first part first. Okay, complete the following table to show the stakeholders and their interests. Okay, so customers, what are they interested in? Okay, usually customers are interested whether we can to assess. Okay, we we use their format to assess if the business whether they can provide a steady supply of goods, because this is very important. If you begin to buy, this usually is your retail customers. You are the wholesaler, and they want to continue to buy. They do not want to always switch to other suppliers. So next one, to know comparative business performance. So this is, of course, your competitor. Next, local community. Your local community may want to know whether your company will positively or negatively affect the community or not. So possible that they want to know if the business would damage local environment. Next one, to assess whether the business can provide a return on their investment. Then this would be the investors. Shareholders. Government, to assess how much tax would be received. So let us move to the email. Anthony works as an accounts assistant for a firm of accountants. He received the following email from Kelly, a client of the firm. So to Anthony from Kelly. Hi Anthony. In order to complete my accounts for the year ended 30th April, you will need the following information. On the 1st of December, year 2018, I received cash of 3750 from a credit customer whose debt had been written off as irrecoverable last year. I took this cash to pay for a holiday. So two things. First thing, if you receive cash and then it is irrecoverable debt written off last year, then it will become your income. Irrecoverable debt recovered account, it is your income. Second, the cash is took to pay for a holiday, a private holiday, then it should be the drawings. And then the next paragraph, on the 30th of April, that is the last day of the year, I guess, is it? Yes. Trade receivables owed 110780. This includes 1180 from a credit customer who cannot pay and is to be written off. The allowance for doubtful debt last year is 2710, and I would like to increase the allowance to 3% of the trade receivables, sorry. So calculate the allowance for doubtful debts at the end of the year. Sorry, let me click the mic in a better position. So we will calculate first. 1 marks here, so no need to show the workings. So the current year allowance for depreciation would be 110780 minus 1180 first. So this is the net receivable, and then 3%. The balance should be 3288. And now let me calculate one more time to make sure I am correct. Yes. Okay. Last year it is 2710, so it should be increased by 578. Okay. So let us put it there. Calculate the allowance for doubtful debt as at year end. So 3288. Okay, not the allowance needed. Okay, but now you have to prepare the allowance for doubtful debts account. So year 2018, we have the opening balance, 1st of May balance, how much? 2710, I think. Let me check. 2710, yes. Okay, and after this you have to add to it. So year 2019, 30th April, statement of profit or loss, 578, and that makes the total 3288 to be brought down, carried down. Okay, so 3288, year 2019, 1st of May balance. Okay, so 3 marks only. So next, state the section of the statement of financial position where allowance for doubtful debt will be shown. Okay, of course it will be in the current assets. Okay, under it is a reduction of your trade receivables. Okay, next one. Prepare the journal entries to record the irrecoverable debt recovered and the irrecoverable debt as well. Okay, so if you have irrecoverable debt recovered, you will do 2 things: debit cash and then credit irrecoverable debt recovered account. Okay, but then this time you use the cash for your own holiday, so it will be drawings instead. Okay, so here, what's the date? Let us check. Okay, it is the 1st of December, year 2018. So 1st of December, year 2018. Okay, we have, okay, and narratives are required. Okay, so we have that amount 3750 drawings, 3750 irrecoverable debt recovered. Cash received from irrecoverable debt written off in previous year and used as private holiday payment. Okay, finish. Okay, very long. Okay, next one, you have the irrecoverable debt written off at the end of the year. So 30th April, year 2019. Okay, 1180 is the amount of irrecoverable debt written off. Okay, so it would be, first of all, irrecoverable debt. Okay, and then you have trade receivables, ledger control. Okay, finish. Okay, how many marks? 6 marks here. Okay, next. State 2 ways Kelly can reduce the possibility of irrecoverable debt. Okay, so I may say, first of all, credit check. Okay, make sure you have credit customers that can pay back, by doing different background credit check. Okay, and also you may also provide cash discount to encourage early settlement. Okay, if you get early settlement, then most probably you won't suffer so much from irrecoverable debt, because if you choose, you will choose someone. I mean, if you are in financial difficulty but you still have some cash and you have to pay your different creditors, and you will choose, if creditor A give you cash discount, then you will settle that account first, because that will be your income. Next, explain, referring to an appropriate accounting concept, how Kelly should account for the cash taken from business for her own use. Okay, so this is, of course, the business entity concept. Okay, and this concept requires that the transactions of the business, should I say, of the owner, is separate from those of the business. Okay, and these expenditure should be entered into the drawings account, which would be a reduction of capital afterwards. 2 marks only. Question 2 finished. Let us move on to question 3. Question 3, partnership. So let's see. We have 3 partners sharing profit and losses equally given to you. This is the closing balance, closing balance of the capital and current account of the 3 partners, and Agnes' current account balance is negative. On the 1st of May, Agnes left. Bria and Carlene decided to continue, and then the profit and losses sharing ratio 3:2. Assets were revalued as shown. Given to you the increase and the decrease of it. Goodwill was valued at 126,000. Partners decided not to maintain goodwill in the partnership books. The amount due to Agnes was settled by a 9% loan, 50,000, repayable over 5 years, with the balance paid by check. Okay, so 50,000, payable over 5 years, 9%, balance. Okay, so state 1 advantage of being a limited liability partner. So we know usually we have unlimited liabilities for partnership, but then there's also a possibility after fulfilling certain criteria, you can have a limited liability partner as well. So one advantage is that you can the private assets will not be claimed to settle the business liability. Okay, just now I have been thinking, from what perspective are we going to answer this one? State one advantage of being a limited liability partner. Of course, we stand from the viewpoint of that limited liability partner, so we do not have to use our own asset, okay, to repay the business liability if the business cannot settle their own liability. Okay, but then here, if it is a general question, so what if, okay, we have a business that have a limited liability partner, okay, what is the advantage of it? Then it might be that we are more able to obtain finance because they are protected. Okay, they do not fear that their own property will be seized. Okay, so we have to be careful at the viewpoint, okay, at whose viewpoint we are answering this question. Okay, so part B, explain one reason why it would be necessary to revalue the asset on the retirement of a partner. Okay, so you can have different ways to do it to answer this question. One is that, okay, to adjust value of assets to its fair value. Okay, so that it reflects the real value of the business. Okay, so you may also say something like this, okay, because, okay, as time passes, the carrying value, okay, would not be close to your fair value. Okay, so it would be good to reflect the real value of the business because there will be a change. Okay, we have to know how much the business is worth before we can settle the amount due to the retired partner. Okay, so next one, we have to work on the revaluation account. Okay, we are given directly, how much increase or decrease of the value of assets we are dealing with. Okay, revaluation account, if there is an increase in the asset, then it goes to the credit side. If not, it will be in the debit side. Okay, so let's see. We have land and building increase, and then fixtures and fittings decrease, and then inventory. Okay, goodwill, we will do it separately. Okay, and then no other things. Sometimes you can also bring the revaluation of goodwill in the revaluation account, but usually we can see these LCCI questions would not do that. Okay, they tend to deal with goodwill separately. Okay, so there is an increase in the value of land and buildings. Let us put it first. How much? 75000. 75000. This is land and buildings. I remember we also have an increase in inventory. Okay, so the date, what is the date? 30th April. Okay, so year 2000, we are going to do revaluation on the 1st of May. Okay, so we can see that we will have a revaluation gain What's the name of the three partners? Agnes, Bria, and Carlene. Bria, Carlene. Okay, finish. 5 marks. Okay, so next one, the capital account of Bria and also Agnes. Okay, how about no? Okay, how about the capital account of, okay, no. Agnes is living, right? Or Agnes, yeah, Agnes is leaving, so this is Agnes account. Okay, so for Bria, okay, first of all, we will have the revaluation gain here. Okay, positive here. 1st of May, revaluation. Okay, also for Agnes. Okay, then we will deal with goodwill. Goodwill, how much? Goodwill of 126,000. Okay, 126 divided by 3, it will be 42,000 for both. Okay, so goodwill. For Bria, she will continue with the partnership, so we will work on the goodwill written off. So Bria and Carlene will each bear the goodwill written off, the loss or goodwill written off of 63. No, they are not sharing equally. Okay, it's 3-2, right? Let me check. Yes, remaining will be 3-2. Bria and Carlene. And at the same time, we look at the current account of Agnes, 6,800. Okay, so 126 divided by 5 multiplied by 3, so it's 75600. Okay, so nothing else, then we balance the account. 90,000, 16370, 42,000. Okay, so it's 72770. 72770. Okay, let me fill in all the details. 1st of May. Okay, also the 1st of May. Okay, or you can write 2nd of May. Okay, it depends on whether they will continue to work on the 1st of May. Okay, both will be correct for me. Okay, so this one, goodwill written off. Okay, and then this balance carry down, balance brought down. Okay, next, after revaluation and goodwill, we have the current account debit balance. 1st of May. Okay, and nothing else except for the final settlement. Okay, so 1st of May, you will have 50,000, the 9% loan from Agnes. Okay, so how about the final settlement paid by check? it will be equal to 116570. Okay, let me check again. Okay. State the section of statement of financial position where Agnes' loan will be shown. Okay, it would be non-current liability. Okay, let us look at one more thing here. Okay, this loan is payable over 5 years. That means most probably by installments. Okay, but then if you are not told how the first installment is to be paid, okay, you assume that at least it is 1 year from now. So it is borrowed on the 1st of May, so next time you will repay on the 1st of May, and our 1 year cut off is from the 1st of May to 30th April. Okay, that means it will be long term. Okay, so next one. Agnes is considering investing the cash she has received from the partnership in another business. The following information is available for 2 businesses. 5 points for the evaluation of these ratios. Okay, so let us see profit for the year as a percentage of revenue. Okay, of course here, return on capital employed, this one is better. Quick ratio, okay, quick ratio, and also acid test ratio. Okay, both the same for Hay Limited. Okay, and it is, can I say it is good, or will it be a little bit too much? Okay, I will say it is good. Okay, not too much. Okay, it's not 20 to 1, it's 2.1. Okay, and you can see that they are the same, means there is no inventory. Okay, you can point out this point. Okay, so in the paragraph I may say, okay, for the profit percentage, okay, Hay is better. Okay, Hay is better. Hay Limited is better. It means that, okay, they are able to sell the goods at a better price and at the same time have good control of expenses. Okay, and then return on capital employed, okay, the ROCE, okay, this GACA is better. Okay, you can say although we have a lower profit percentage, okay, we still have a higher ROCE, meaning that we are using less finance to generate good returns. Okay, because for you, if you are an investor, yes, of course you are interested in the profit percentage, but if you have a high profit percentage but low ROCE, it still means that this business cannot make good return for you as an investor. So as an investor, ROCE would be more important than the profit percentage. Okay, so next one, the liquidity. Okay, we can use liquidity, okay, would be Hay Limited is better, okay, because it has 2.1, okay, to 1, 2.1 to 1, okay, better than 0.8 to 1 and 1.6 to 1, okay. It means that Hay Limited is more able to repay current liabilities using its current asset. Okay, and also there is no inventory. No inventory meaning no risk of inventory impairment. Okay, no risk for inventory theft, something like that. Okay, so in conclusion, I would say maybe Hay Limited is a safer investment option. Okay, but then it will give you a little bit lower return of 5% ROCE. Okay, and for Gaka, it is a little bit more risky. Okay, because the liquidity is not that good. Okay, but then still making a good return for potential investors. Okay, you have to see if you are a risk taker or you want to get some safe money for return. Okay, so that's my conclusion. So let us take a short break, and then when we come back, we will deal with two more questions. Okay, the next one will be single entry, not really single entry, but this is single entry and sole trader. Okay, they always mix the two. Okay, I mean combine the two. Okay, and then we also have a statement of cash flows. Okay, two more questions. Okay, a 10-minute break. Okay, let's continue. So, let us go back to question 4. Question 4 is single entry and sole trader. I would classify as sole trader. Okay, so sealant provide the following information. Okay, opening and closing balance for non-current asset inventory, cash and cash equivalent, trade receivable, payables, other payables. Okay, and during the year, sealant sold on the third. When was that? Okay, so this is the last day of the year. Sealant sold non-current assets costing 122. These were taken as a trade-in allowance for new non-current asset costing 80,000. The balance was financed by a loan repayable on the 31st of January. So the trade-in allowance is not much, 80,000, and then minus this. The trade-in allowance is only 5050. Summarize statement of profit and loss for the year. Let me see. Okay. Okay. Revenue, cost of sales, gross profit, expenses, and then profit for the year. Inventory turnover, 3.2 times. All sales were on credit basis. Trade receivables collection period, 45 days, assuming 360 days in a year. Okay. If that's the case, we can calculate two things: closing inventory and closing trade receivables. Okay, we have to prepare the statement of financial position directly. Okay, and then some other things. Okay, so let us see. Okay, so inventory turnover is 3.2 times. Inventory turnover is equal to cost of sales. Cost of sales would be 80,000 divided by the average inventory. Opening inventory would be 21000 plus closing inventory, we don't know how much. Okay, divided by 2, then we have 3.2 times. Okay, that is 21000 plus this one divided by 2, we have 80,000 divided by 3.2, that is 25000. Okay, and then multiply by 2, so 21000 plus closing inventory is equal to 50,000, and then closing inventory equal to 29,000. Okay, one working done. Okay, this should be done in the next page. Okay, for the workings. And also trade receivables collection period, because all sales are on credit basis. So trade receivables collection period will be trade receivables over sales, 230,000 multiplied by 360, we have 45 days. So trade receivables is equal to 45 multiplied by 230,000 divided by 360. It would be 28750. Okay. So here, for the cost, okay, cost of the non-current asset, we have to take away 122,000, okay, and then add back 80,000. Okay, it doesn't matter how much the trade allowance is, okay, but then this loan repayable on 31st of January year 2020, this would be your current liability. Okay, current liability, because it will be within 1 year. Okay, so we have finished everything, except there's one figure that we still need, and that would be the drawings. Okay, because you are given the profit, you're not given the drawings. Is it? Do you need opening? Okay, and you can use this one to find the opening balance. Yes. Okay, so let us calculate the opening balance. Inventory, cash and cash equivalent, trade receivable, payables. Okay, so when we add these things up, okay, we will find our opening equity. Okay, so it is 60240. Okay, and then the cost minus 122 plus 111000 minus 19900, we will have 91100. Okay, so now we have everything we need. Let us start. Okay, this is just for workings, we don't need it. Okay, here. Let us make it 3 lines. I always like to show the cost, accumulated depreciation, and carrying value. Okay, so let's start. Okay, non-current asset. Cost, accumulated depreciation, and carrying value. Okay, we only have one item. Okay, non-current asset here. $119, right? And then here we have 91100. Okay, 111. Okay, next we will have current assets, inventory, trade receivables, no other receivables here, Okay, if not, it will be trade and other receivables. And we have cash and cash equivalent. Okay, so inventory and trade receivables, we have 29000 and 28750. Cash and cash equivalent 8,300. 300 29000 28750. Okay, together we have 66050 plus 157150. Okay, total assets. Okay, next. Okay, here we can also add assets here to make a better format. Okay, here we have equity and liabilities. Okay, and we have equity, opening equity at profit for the year, less drawings. Drawings is something we need to find from this statement of financial position, and then we have the closing equity. Okay, last item as the drawings. Okay, so opening equity 60240, 60240, and then at profit will be 60,000, and then less drawings. Okay, so next one we have liability. We do not have non-current liability, we only have current. Okay, liabilities. We have current liabilities. Trade payables, trade and other payables. We have the loan. Is it a bank loan or what? Loan. Okay, the loan is 74950. 74950. Trade and other payables, we have to add the two. Okay, here 28930 and 730. 29660. Okay, so we have finished. Total equity and liability. Liabilities 157150. Okay, this is from here. 104610. Okay, so we have 52540 here, and then minus the two items we have. Okay, so in total we would have drawings of 67700. Okay, done. 15 marks, I think. Is it? Oh no, 11 only. Okay, but then that's some points. Okay, so next one we will state one way of improving the inventory turnover ratio. Okay, so if you want to improve, then you can, you know, first thing, sell more. Okay, sell inventory quickly. Okay, you can also purchase in less bulk. Okay, you purchase in smaller amount, okay, and then you sell it and then purchase again. Okay, both can improve your inventory turnover ratio. The trade receivables collection period, okay, you can limit their credit line. Okay, if they want to buy more, then they have to settle their accounts first. Or you offer discount, cash discount. Okay, next. Ceylon is considering how to fund the repayment of loan due in January next year. He has two options. Option 1, obtain another loan, admit a partner. Discuss which option Ceylon should choose. Justify your decision. Okay, so if you want to borrow again, okay, borrow, okay, then you need to pay interest. Okay, and then by the time you need to repay, okay, there is a maturity for the loan. Then you have to think again how to finance that other repayment of the loan. Okay, if you have to pay interest, then it means that you will have lower profit as well. Okay, but then for admitting a partner, that means you will have a partnership. Okay, it is good that you have more capital. You can also have more labor force, okay, more skills. Okay, but then, okay, and you don't have to pay interest. Of course, you have to pay your partner, but then it is an appropriation. Okay, so we have a big but here. Okay, but then you have to share the control of the company, of the business. Okay, and you have to share the profit. Okay, so you have to see, okay, of course you need a conclusion to be made, okay, and whether you will continue to borrow or you admit a partner and form a partnership, it depends on the original owner. Okay, if that person wants control of the company, or if he or she wants an expansion of the business. Okay, both can be, you just have to justify. Okay, so this is question 4, 18 marks. Let us go on to question 5. Okay, that will be a statement of cash flows. Let's see what is being asked. You have this company giving you the following information. Okay, let's not read it first. Okay, the reconciliation of profit to net cash from operating activities. Okay, first part. Okay, and then you have to calculate a few things: the accumulated depreciation on asset disposed, cost of asset disposed, and also any addition of property, plant, and equipment during the year. Okay, that is everything related to the movement of your non-current asset. Okay, and then the whole statement of statement of cash flows. Okay, no discussion questions. Yes, I like these kind of questions. I like working on numbers. Okay, not so much on explanation, but then in order to deal with this exam, we still need some. Okay, around 20% of it explanation. Okay. So let's see. Okay, bank from positive to we have to be careful. We really have to be careful. Okay, I hate LCCI doing this all the time. That is, you can see this is year end, and the right hand side give you the figures for year start. Okay, and if you are not careful, okay, then you will mix up. Okay, so from year 2018 to year 2019, from bank overdraft to positive bank balance. Okay, so this is new. This is old. Okay, always remind yourself. Okay, that is, you have an increase in cash and cash equivalent. Okay, 31945328840. Okay, of 64785. Okay, that is quite a lot. Okay, bank loan from 162 to 312. You have borrowed more money, 15,000. Okay, and that would be your financing activities. Positive, borrow more cash. Okay, decrease in cash. So be careful, because cash is also cash and cash equivalent. That means, let me erase this. Okay, so you have 32145 cash and cash equivalent, and then negative 32590. Okay, that means you have an increase of 64735. Okay, so next you have the movement for property, plant and equipment. We will look at it later. Is it the full thing? Yes, I guess. Okay. Okay. Property, plant and equipment, the cost and the accumulated depreciation. I will write again in another way. So the cost, the accumulated depreciation, opening balance A2100, and then 28600, and then here we have 98900 and also 44395. Okay, as you know, the cost we have add purchases minus disposal, and then for accumulated depreciation, add depreciation minus disposal. Okay, we have to be careful. Okay, so let me erase. Share capital from 120 to 135. That is, you have 15 more. Okay, and for share premium, 19 to 22, that is 3,000 more. Added together, you have 18,000. That is an issue of shares. Okay, financing activities, positive. Profit for the year given to you, depreciation. Okay, depreciation is here, so we add depreciation 18205. Okay, and with this you can find the disposal, the accumulated depreciation for the disposed non-current asset. Okay, 28600 18025 minus 44395. Okay, you have 2410. Let me calculate one more time. 18205 286 minus 44395. Yes. Okay, so loss on disposal, and then proceeds from the disposal of equipment. Okay, then you can calculate this working. Okay, I always use this for the disposal. Okay, proceeds is equal to 7740, okay, minus the cost minus the accumulated depreciation. So cost we don't know, but then accumulated depreciation 2410, and then we have the disposal loss 1750 negative. Okay, with this we can find 9490 being the carrying value of the assets disposed. So 9490 plus 2410, you have 11900. Yes. Okay, so here the disposal will be 11900. Okay, and then with this you will be able to calculate the addition. Plus 4900. Okay, done. Okay, let us mark all the information that we need to put in the statement of cash flows. Purchases will be your investing activities negative, okay, and then the proceeds positive. Depreciation operating activities positive, disposal loss operating activities positive. Okay, increase in inventory negative, increase in trade receivables negative, decrease in trade payables negative as well. Okay, all operating activities. And then dividends paid, financing activities negative. So now we have finished everything that we need, okay, to work on the answers on the coming parts. So let us put the thing. Reconciliation. Okay, so here we have the net profit for the year. Add depreciation, add disposal loss, and then we will have less increase in inventory or minus increase in trade receivables, decrease in trade payables. Okay, and then we will see if we have a net cash from or used in. Okay, net cash operating activities. Okay, so profit for the year will be 68360. Okay, depreciation 18025, and then disposal loss 1750. Six, 360, 18205. 19955. 88315. Okay, inventory, trade receivables and payables 18610, 18610, 7070, and also 3940. Okay, I hope I copy the figures correctly. 29620 negative, giving you 58695. Okay, this is net cash from operating activities. Okay, so for the next 3 items we have already calculated, so I will not copy all the workings. Okay, you already know how to. Okay, these 3. Okay, so cost of the asset disposed 11900, and then accumulated depreciation 2410. Additions of property, plant and equipment will be here 4900. Is it? Oh no, there should, let me recalculate. 82100 minus this one minus this. Okay, why? What happened here? I miscalculate. Okay, here it should be 28700. 28700. Let me calculate again. 2100 2870. Okay, yes, 28700. Okay, because I think it is too small the number, that's why I doubt a little bit. 28700. I forgot to change it to statement of cash flows again. Too excited to move on to the last question. Okay. Whew. So last, we will work on the statement of cash flows starting with the net cash from operating activities. Okay, here. $58695 net cash from operating activities. Okay, so next we have cash flows from investing activities. Okay, we have a disposal, we have a purchase. Okay, so add proceeds from disposal of non-current asset. Okay, and then less payment to acquire non-current asset. We don't have any other item, I think. Okay, so the proceeds, the purchase is 28700 and the proceeds is 7740 given to you directly. 7740 and then 28700. 20960 negative. Net cash used in investing activities. Do we have any dividend paid? We'll have to see. Okay, so next part, cash flows from financing activities. Okay, first of all, I remember there is an increase in bank loan. Second, there is an issue of shares. Okay, and let's check the figures. Bank loan, we have 15,000, and then issue of shares 18,000. Dividends paid 6,000, given to you directly, less dividend paid. Okay, so we have 6,000. Okay, and then 15,000 here, 18,000 here. Okay, so 15, 18, minus 6,000, 27,000 positive. Net cash from financing activities. Okay, now we see if we can balance the figures. 586,695, 20960, 27,000. That is 64735. Okay, I think it is very similar to what we have calculated. Net increase in cash and cash equivalent. What is the year start? 1st of July, year 2018. Of June. Okay, 64735. Let us go back. 64735. Yes, that is correct. So let us put the opening balance and closing balance that we have calculated. Opening balance being negative 32590, and then yes, closing balance 32145 positive. Let me check. For 64735 minus 325. Yes, correct. Okay, finished. 22 marks. Very good. Okay, so now we have finished this 8th set of paper. Tomorrow, hopefully, okay, we will finish another set of paper. Okay, and then I will take my summer vacation break. Okay, and after I am back, we will continue with other papers. Okay, remember when we first started, our aim is to attempt 30 sets of questions. Now it is not even 1/3. Okay, so hopefully we can still do it. Okay, we have 1 more month after I'm back. Okay, so see you. Bye.